Welcome to this week's On the Spot. I'm Tony Mulvey, joined by Thomas Wasson. Thomas, how are you?
Doing pretty well, Tony. Happy to be on for round two, but we got a bunch of exciting stuff going on.
Yeah, I mean, we had, obviously, this week's a holiday week, right, with Labor Day. So what we're going to look at today is kind of how these holidays affect the freight market, right? When you think about it, there's catalysts to tighten the freight market, holidays being one of them, right? Drivers come off the road, rejection rates typically go up, pushes rates higher, lead times get extended. So we're going to kind of look in at each of those, right? Rejections, rates, and lead times, and kind of show how these holidays have affected the freight market in years past and how that compares to this year. So we'll bring up our first chart here. It'll be our outbound tender reject index. So we've got rejection rates. You obviously see it 5.7% or 5.57%. You see that little increase. It's about a 30 basis point increase. But if you look back 2021, you saw a bigger increase and we were already elevated. You look back at 2019 or 2020, you saw a big increase, already elevated. Look at 2019, you saw a bigger increase than what we saw here in 2022. Yes, rejection rates were slightly lower, but what it seems like is this Labor Day, things were kind of muted in the market.
Exactly. And when you're looking at the situation, that's what's so remarkable. Like you said, coming off of like 2022, we're in a situation where there is an abundance. And now coming down at 5.57%, you're kind of in the money in terms of carriers no longer have that pricing power. And so even like you said with Labor Day, there was not a significant blip in the van. Now the reefer side obviously saw some movement in the carrier updates, but this is what's very interesting. Good for shippers, concerning for carriers, because now we're seeing that freight move back into contract and spot's gonna have lower activity.
Yeah, and you can talk about this. I mean, how carriers kind of react around holidays, whether drivers come off, especially like maybe in the owner-operator side, where they come off for, say, the whole week, that they extend that Labor Day holiday, right, to a chance for them to come off the road. When you see this reaction, I mean, does this signal, hey, maybe they're not staying off the road? Maybe they came off for the weekend, but they're not, they got to keep their truck moving because they're kind of on their back foot with the way rates have reacted.
Well, I mean, what this tells to me is you're always going to have drivers that are going to be leaving, like you said. Even when I did OTR, regardless if it's an owner-operator or regular, it'll take a few extra days. They'll say they're going to be ready on Monday. It's more like, oh, Wednesday, I got some more stuff I need to do. So, what this tells me is if we saw we'd see a rise in rejections with larger carriers saying, oh, I can't take this. I don't know my drivers are available. Seeing this lower number tells me that we're still in a situation where we have to fill the contract bucket, put everything on auto accept, because there's still a lot of disruptions and, localized capacity disruptions. You're still going to take the freight. And then they'll pick it up eventually if you have to.
Exactly right? It's the accept, and we'll figure it out from there. We'll move on to our next chart. It'll be our NTI. And this is one you saw a positive reaction in July, around the 4th of July, which was expected. You'd expect to see one in Labor Day. I mean, you look at 2019, you see that uptick, right? And it's a pretty substantial uptick. I mean, it's probably 10 cents. Guess what? I mean, we went up just a few cents here in 2022, right? So again, it is the reaction you would expect to see, but it seems muted compared to previous years.
Completely, and I think a lot of that goes to the amount of trucking supply in the market. And this is a great way to see that, even in 2021, we saw a large uptick during this time year over year because there was a situation where you felt that outsized effect. But right now, like you said, there's so much latent trucking capacity that this is going to be really interesting. What does this mean towards moving towards the holidays? And are we going to be matching 2020 levels are going to be really big conversation pieces.
Yeah, I mean, I think that's the interesting part, right? I mean, even if you look at 2019, that's a perfect example of kind of where you look at rejection rates, we're about 100 basis point difference in where we were compared to 2019. Rates are still elevated, but you have to factor in costs are elevated too. I mean, fuel's higher, maintenance cost, everything's just more expensive now. So you've got to adjust that up slightly. What's going to be telling as we move into this fourth quarter, right? We close out the third quarter here in September, move into the fourth quarter, is what do these rates do? I mean, do they follow a trend like 2019 where it kind of flattens out in September, declines in October before ramping up into the holiday, or are we, hey, we're going to decline until that holiday, right? I think that's going to be the important part, that how does that play out in the market?
Exactly. And what if it stays the same, but not taking into account, like you said, adjusted for inflation?
Yep.
So that, we're currently hanging around at about 269. When we're approaching that 2020 level, there is a different situation in the inflationary game. So, that you're going to lose a lot of that. It may look like it's more, but at the same time, the fear is that you're still losing money because we still have rampant inflation.
Absolutely. We'll move on to our last chart here. Kind of gives a look at shippers' insights, right? Lead times get extended around holidays because they expect these network disruptions. Look at it. It's every single holiday, July 4th, Memorial Day, Labor Day. You see these reactions. And this side is a little bit more of a reaction. I mean, that bump up in 2022, that white line that you see compared to 2021 is higher, right? They expected more disruptions. And really, what we see you look at rejection rates, you didn't really see that disruption. It's more localized than it is maybe across the country.
Exactly. And this tells me, this is what year over year, it consistently moves up. Are shippers getting better and they're tendering further in advance, or do shippers want to save more money so they're tendering further in advance? That's kind of the big question that I'm curious to see as we move on, because you can see this year, we're still pretty much higher over 2021 and 2020. So part of me is thinking, well, I mean, if I'm a shipper, send it out earlier, my tenders, but at the same time, we're seeing that they're still trying to see cost savings by sending it further, let a few people decline, send it to spot.
Yeah, it's one of those, there's two sides of the coin. We don't really, it's hard to tell which one. You can make the argument for both. Is it cost savings or is it risk aversion, right? I mean, it's two sides of, I don't want to say the same coin, but they have two options and they may be playing both hands.
Two sides of the truckload.
Yep, absolutely. Well, thank you so much for joining me today, Thomas, on the Spot. Right now, we'll take a quick break. We'll be back with more Freight Waves Now.